What's going on, everyone? We're going to be talking about how to start day trading futures for beginners. Now, whether you're looking to day trade a personal account for futures or you're looking to get funded with a prop firm, I would always recommend start off with a prop firm. It's like paper trading, but yet you got a little bit of skin in the game, because if you can prove that you can trade, you can get funded, and then you can start taking those withdrawals versus putting a bunch of money into a personal account, getting blown up, and then having a bad taste in your mouth. So today I was kind of messing around with a few different scalps. I was scalping anywhere between 5 and 10 micro contracts at a time. So that's why my trade count is about 35. I didn't actually take 35 trades, but just because of the way I scale in and scale out, each one of those scale ins, taking profits. If I'm in 10 contracts and I sell two, it's going to go up on my trade count. But you can see here, winning trades 30, losing trades 5. I had a total win rate of 85% today on the day. Now, commissions and fees, because I was trading a lot of micro contracts, was 113. My net P&L is $202.28. The total P&L was 315. So even with that, you have to understand, I trade options on a day in and day out basis. That's my bread and butter. That's where 90% of my overall profit is coming from. That's how I live. That's how I kind of survive, is off those options trading. But when I'm done and either I have a green day or a red day in options, I like to get over on my prop firm accounts. I'm trading with Apex, I'm trading with Top Step, as well as Surge Trader. I use all three of them. If you want to sign up, those links are down in the description box below. Those are the three that I use. They work for me. I like them. Customer service is great, so forth and so forth. But the point I'm trying to make is that if you can, take your personal accounts, whether you're trading stocks or options, and then you can also kind of parlay that into using your skill set to make a little bit of coin on the future side of things, where you're working for a prop firm, I think you can add to your bottom line, and it would definitely help that overall P&L, that overall stress level, that overall kind of, taking the weight off of your shoulders of just having to focus on making everything in your personal account. So what we're going to be looking at here is a few of the setups that I was looking to take today. Again, I am a scalper when it comes to trading these futures, so I'm not really going to be holding them that long. You can see here, right before the New York session opened, we had a very nice short position here at around 5:30 a.m. Pacific Standard Time. You can see that overnight session, that pre-market session, kind of came down to our linear regression line here, and then we had this breakdown. So what you could be telling yourself here is that if we lose this channel level, let me put a stop up at the highs, right? We have the high wick here, we have the previous 5-minute candle, we have the candle before that. You can put a stop loss here, okay? You can put a stop loss here, and if we lose the lows, you can take an entry here, and then as long as we stay below your stop loss, you can just take profits on the way down. Now, you're never going to catch the whole move. Again, I have yet to find a trader that, gets in here and then is literally selling right here. It just doesn't happen, right? And if anyone says that they are doing this, I would kind of raise your eyebrows. But again, I like to look for 2, 3, 4 pushes down. So if I'm going to get in here, I'm going to look for the first push down, second push down, third push down, and normally I'm going to take profits. And you can see here on that third push down, we get a little bit of a reversal before we take it out again. We get a little bit of a reversal consolidation, and then we take it out again. So that's normally how I'm kind of playing it. Again, this is one setup that could have been taken today as well. The setups that I was taking here were more so to the long side. So being that I do trade options in this kind of zone here, this is my bread and butter for trading options. I don't really have a lot of time to focus on futures. So as I start to get into that New York lunch hour and coming out of the New York lunch hour, I start to look for my setups on futures. Now, one thing that was really catching my eye here was this bottom and this bottom. To me, a little bit of a double bottom. To me, we are holding a floor here. To me, you could basically set a stop loss at these lows and jump in long. And if we do take it out, take your stop loss and kind of get out of the position. And then if not, and we continue to bounce, take your profits into each level of supply. That's one very, very basic strategy and concept that you can look at. I want to really focus, especially if you're a beginner, okay? Trading, especially futures, options, it doesn't really matter what asset you're trading. It's all based on probabilities, right? So you're going to hit a streak of wins. You're going to hit a streak of losses. All you can really do is manage your risk. That's the only thing that you as a trader can do, is manage your risk. Now, what that means is that once you get into the trade, whether the trade looks absolutely perfect, or it's just kind of a cash flow move where you're just looking to take a little piece of that pie, no trade is going to work 100% of the time. Okay, we try to give ourselves the best possible edge so that we do have that edge. But again, once you get in trade, there's nothing physically, mentally, psychologically that you can do to make those candlesticks go in your favor. The only thing you can do is manage your risk and manage your position sizing. So here's one thing that I'm going to recommend to everyone. First, if you're going to trade futures, I would say go trade futures for a prop firm. I would say the top two futures, kind of firms out there for me, Top Step and Apex. Both of them, rules are fantastic. One of them has a trailing drawdown, the other one does not. Both of them are one step. Both of them have affordable pricing. Those would be my by two, right? So you don't have to be biased. You don't have to just be a Top Step trader. You don't have to just be an Apex trader. Go get both, right? I have 3 companies. Doesn't really matter as long as they're all paying, and that's all that really matters at the end of the day. So with that being said, what you can do then is take that investment past the combine, past the evaluation, start getting comfortable getting in and out of trades. A lot of times traders are very hesitant to take positions. Like, for example, they'll see the bottom here, they'll see the bottom here, and they're waiting for this to come up, and they're waiting for a better entry. And it's like, if you were to ask them, it's like, well, what are you waiting for? Well, we're still below the open price, so I'm waiting for it to get up here. And then what ends up happening is they wait this whole time, and then it does something like this. Peekaboo, boom. Then you get smashed. And then they're kind of wondering, like, well, I waited for all this confirmation. I waited for us to take out the high of day. Why did it pull back on me? Well, because the bottom was here. Okay, the bottom was here. You missed out on a price of 15,120 all the way up to 15,230. This is a 100-point move, almost a 100-point move that we've had in the last hour to 2 hours here. It's like you waited through this whole move to take an entry up here just to get stopped out. And that's exactly what big money and institutional traders are looking for. They're looking to peak you out here for a breakout and then stop you out and then take your money. That's what they're looking for. You want to get in at these firm levels of support and tell yourself, if we do pop and then we do lose this area, I'll just get out of the trade, and that's completely fine. I'm okay with living with that. I'm okay personally with jumping out of the first floor or the second floor and then getting stopped out versus jumping out of the 5th floor or the 10th floor and potentially breaking my neck. I hope that makes sense. The pullbacks are a lot more drastic the farther away from the support that you got. So the plays that I was looking for here today was a little bit of a scalp using these as lows. Let me get back over my 5 and 10-day moving average here, my 20-day moving average. You can see we got over here at just about over 8:30 a.m. Pacific Standard Time, and I'm looking to just take profits into the next next supply zone. That would be here at the 50 SMA. On the pullback, I want to see, do we hold the 5? Do we hold the 10? Do we hold the 20? In this particular case, we do. All I'm looking for now is a green candle to take out red. This green candle takes out this red. I want to jump back in. I want to get in and hopefully confirm this 50 SMA here. You can see we confirm it. We do pull back and test the 5, and then we shoot up again. Again, I want to take those pushes either into the next supply, right? Into the next supply, or I want to take 1, 2, 3 pushes, which you can see the third push actually took us into the next supply. So on my profit taking, I'm looking for 2, 3, 4 candles higher above my entry to take profits, or that supply zone. For my stop loss, I'm looking for a breakdown of the 5, 10, or 20-day moving average. That's definitely, if I'm going long, going to be my stop loss. If we're going short, it's going to be the same thing, 5, 10, and 20. So I'm looking at those and kind of gauging and managing my risk that way. I use these moving averages to kind of fan out. I use them to kind of act as my kind of my bumper walls, right? If we're bowling, we put those bumper walls up. I want to have a safety net. I want to understand that, hey, if we lose the 5 and we lose the 10 and we lose the 20 and I'm crying that I'm in drawdown, that's my fault, right? That's my fault, because the chart is telling me you had 1 opportunity, 3 opportunities, or 2 opportunities, 3 opportunities to get the hell out of a losing trade, and you are too stupid to get out of the trade. Talking about myself, not you, obviously. You are too stupid to get out of this trade, Mr. D. Anthony, and you deserve to get your money took. So again, I use the 5, 10, and 20-day moving averages as my guidelines and as my stops. Again, sometimes I will give it all the way to the 20 here before I do stop out, just because sometimes, you know, I manage my size so small playing micro contracts versus the minis that I can afford to let it kind of wiggle down there and see if it's going to recuperate a little bit. And if it doesn't, then hey, I have to just take the loss. So again, just to kind of recap here, futures trading for beginners, here's what I would recommend. Go out, get funded with a prop firm. Doesn't matter which one it is, okay? 2, I would start off recommending trading the NQ or the ES, but trade the micros. So that ticker symbol is going to be MES for the SPY, and it's going to be MNQ for the NASDAQ 100. Trade those 2 assets. Also trade micros. I would not trade more than 5 micros at a time. You can still make good money. You can see here, I came into the markets, traded for about 30, 40 minutes here, was able to make a couple $100. How much would a couple $100 a day change your life? How much would a couple $100 a day, you know, be a benefit to you and your family, or your bills, or your mortgage, or your car payment, or your health insurance? How much would it, $200 a day, help you save for that next vacation? If that's, you know, something that you are thinking about, trade the micros. Again, some people are not going to like to trade micros because you can't make thousands and thousands of dollars, although you can. I've made over $1,000 trading micros on great trending days. You just have to know what you're looking for. But you can't make thousands of dollars trading micros, so it's not flashy. You see everyone else, you know, on social media making $5,000, $10,000 a day. Guys, raise your eyebrows at that. It's very, very difficult to make $5,000, $10,000, $15,000, $20,000 if you've only got one account, right? The way that I like to do my futures trading with the prop firms is I like to have multiple accounts with multiple companies, kind of spread out my risk. I'd like to get up to $1 million in funding this year. Currently, I am in the lower 6 figures, above 100,000, below $300,000 in funding, but I'd like to get that up to $1 million. That way I can focus on making 2 to 3% a month on the whole portfolio. I want you guys to really think about your funded accounts like this. Picture yourself as a fund manager. Picture yourself as an asset manager who's managing a book of business. It's not just about your one account. It's about the book of business. We want many accounts. We want multiple size accounts. We want a big book of business, and then we just want to manage those assets to make 2 to 3% a month. 2 to 3% on $1 million is very, very good money. 2 to 3% of $100,000 is not as good a money that you can like kind of sustain a lifestyle. So we need that 100,000, we need 200,000, we need 300,000, 400,000. We need more funding. It's all about having as much funding as possible in order to make this all work. So just think of yourself as a big hedge fund manager. Sometimes I play a little trick in my brain and I come in to start my day and I think about, you know, look at all of my accounts and I tell myself, okay, out of all of these, you know, X number of accounts, I need to, you know, try to make and manage 1 to 2% a day. If I can manage this and I can manage these accounts and I can take these payouts, you know, and I can continue to grow my book of business, which is continuing to grow my portfolio size and my assets under management, I can make really good money. So here's my job today. I cannot lose more than 1% of the account. I can't lose more than 2% of the account. If I'm having a bad day, I got to protect my risk. If I'm having a good day, I need to put the foot to the gas and ramp up those profits. And again, at the end of the month, get close to $1 million, or at the end of this is said and done, get close to $1 million, $2 million in funding. And then that 1 to 2% that you are managing and making and pulling in is fantastic money, versus trying to take $100,000 account all the way to $1 million. Very, very difficult. I hope this makes sense. If you guys want more information on how to play these prop firms and how to trade futures in different strategies that I'm using, make sure to head over to evolutiontraders.com. That's my personal website. Sign up. You're going to get lifetime access to the Discord, the trading courses, and you're also going to get one-on-one 1 hour phone session with me. We're doing a little bit of a training session. You can collect those up to once a week. So every week we can jump on a call, Zoom, Discord, voice, doesn't really matter. And we can go over trades in real time. We can go over technical analysis in real time. We can have meetings once a week. I'm looking forward to working with more of you guys, and I'll see you guys on the next video.